Hi everyone, welcome to today's video. Hope you are good. If you are new to the channel and you'd like to learn more, hit that subscribe button, press that bell button. Only a few of you actually watch these videos are subscribed, so please make sure you are on the subscribe list because nice little updates will be coming your way very, very soon, I promise thee. Now, let's talk about why traders lose money. Simple, right? We're going to go through it. This will incorporate the likes of the forex market, the cryptocurrency market, and most importantly the stock market. It's obvious really, isn't it? So, number one, the best one and the obvious one, lack of experience. You are new, you've been copying others, you don't know all the techniques essentially, or the fundamental analysis elements of the likes of why a cryptocurrency could just pop, why a forex pair could just die, you know, all those sort of things. When you're scratching your head thinking, that person knew what was happening. Now, there's not enough skin in the game for you to understand all the confluence of other indicators. Money management, by the way, more on that later, so do stick around for money management, which in my opinion is about 70% of why people fail. Just putting it out there. Number two, promise riches. You're on Instagram, you're seeing all these people doing this, that and the other in these fancy restaurants. They've got the beers out, they've got the gin and tonic out, essentially. They've got the McLaren, they've got the nice apartment in London. Well, you don't actually see their journey. You don't know if they're real, for one. Most of them are, I'll be honest with you. I know a few of them. In reality though, you do not see their journey, their struggles, their hardships, their losses. You only see because they've built a profile through their success. It's not hard to be a profitable trader if you've been in this game for a while and you've suffered the losses and you've suffered that horrible feeling of losing. But when you come out the other side and you have all the other stuff, which I am going to mention at the end of this video, of what you kind of need to do, and you're going to see that in a second, of why people fail and why people are successful. It's pretty obvious. Just make sure though, if you are following someone, make sure they're legit. Go back in time to see their hardships. Ask them, if you can get contact with them, ask them, what was your journey like? More often than not, they're going to tell you it was fucking hard. Simple. Over leverage, number three. This is a killer, in my opinion. I see it all the time in my paid group, in my premium group of cryptocurrency. People going, oh, I've gone 75x on a trade, I've lost. When you are using over leverage, whether you're in crypto, forex or stock market as well can get over leverage as well, depending on what market you use, especially if you're using a CFD, broker, and you're on the indice trail, or you're on the ETFs, or even if you got on Tesla and you went short and you got absolutely wrecked off that. Ultimately, you are borrowing from an exchange or a broker to essentially allow you to facilitate a trade. Forex, they move less, right? Meaning more money's in the game. The market in the Forex is huge. It's 5 trillion roughly per day. It's massive, fucking huge. But you need a lot of money and capital to play with that game. If you're on 1,000 to 1 leverage, well, you don't have much wiggle room to, maneuver any issues that you may have. So moving on to that leverage side of the game, if you're willing to go that far, please understand that. Start low, build up. Now this is the main one, the main point. Number four, why? This in my opinion is why people fail. They do not understand money management. Money management with risk management is key. Money management is the element that keeps you in the game, keeps you in it forever, right? If you're a twat with your money, you're going to lose, right? If you're the sort of person that gets, Christmas or a birthday, whatever, and you spend it in a second, well, you are probably this sort of person. You like to just get rid of your money straight away. Oh, if I've got extra money in my account, I must spend it. These people will lose. Why? Your equity is at risk, yes. Your leverage amount matters, yes. Taking profits, you should do that too, yes. Risk reward for entries, that comes down for risk management. You should only use between 2 to 3% of your overall equity at most on any trade. So if you've got $1,000 in your account, you shouldn't be using more than $20 at risk, essentially. $30 at most, depending on the entry. You've then got a stop loss within that to accommodate you just in case something goes terrible and your entry levels have changed, or you should map this out anyways as a trade. You should know risk reward is king. Why? You're going to evaluate your trades. You're going to go, what is my risk reward of that setup? I'm going to come on to setups in a second. The last bit, they're probably a very important one of why people fail from the exact start point. You've seen an entry, you think, right, that pattern looks good, it's within my parameters, my trading plan. Well, risk reward is quite good. I can get a risk reward of a 2 on TP1, a 4 on TP2, and then we'll let it run, for example, as a profit element. But sometimes people go, well, actually, I just like this. I've just got a feeling. When you start working with feeling, you're going to start getting hurt. It's like love. You're going to get hurt at some point. One of the things that's an interesting issue is that people don't counteract risk reward. Their stop loss might be, say, 40 pips below, but their take profit might be 20. Well, simple maths and simple money management should tell you that that is a wrong trade to take. It should be the other way around. You should have a stop loss at 20 pips and your TP1 at either 20 pips to break even, let's take a small slice out and get some money off the table, or most importantly, TP1 should be over that at 30 or 40 pips. Money matters. Now, the last one, the technique and strategy must be bang on, because you could become into a cycle of doom. What is a cycle of doom, you may ask? Well, it's simple. You find a strategy, you like it, you test it, it works. You use it for about 3 days. You lose a trade, you then adapt it to think, oh, well, you know, you must accept that losses are a part of the game. Simple. But back testing your strategy and your techniques should be a part of that setup. You should be testing it and make sure it works. Doesn't matter what you do, I don't care. If it works, it works. You must be winning more than you lose. If you can win 8 trades out of 10, you're on a winning run. Even if you lose 4 trades out of 10, leaving you with 6 profitable trades, and you keep all your losses low, you will still be a profitable trader. Who cares if you lose 4? I've seen traders who lose 6 or more trades out of 10, but because their risk reward is so high, they make a lot of money. But ultimately their stop losses and their risk management is key to allowing that. So you got to allow consistency to take veil. Simple. You cannot just let a strategy work with no testing, without proof in the pudding, without consistency. So use a demo account. Make sure that you're looking for the exact same setup and strategy every single time with the right formula of risk management. So there you go. They are the 5. I'm going to recap now. So, number 1, lack of experience. Number 2, you've been promised some riches that may not be there. People do sign you up to brokers for a $500 to $1,000 fee. They do not have your best intentions at heart. Over leverage, simple one. If you're risking money and you want to grow money, well, funny enough, you use leverage. However, if you lose a lot of money quickly. Number 4, in my opinion, probably the most important, poor money management. And obviously risk management is within that. Risk management is a bit different to money management. Money management is how much you put in. Risk management is essentially what trade you're undertaking. Is it worth the risk? And what is your risk reward ratios? And finally, your technique, your strategy, your plan. The basis of it all. Does it work? You must know if it works. If it does not work, you do not do it. You find another method that works. Now, hope you enjoy. This is a bit different, obviously a little bit of a different video, but this works for all traders, even as an investor, guys. If you are an investor and you do not have experience, if you do feel that you've been promised riches, if you feel that, you know, the money that you're risking, you can't afford to lose, well, in reality, you shouldn't be trading. So, catch you in the next video. Please do subscribe. Please do hit that bell button. And obviously, put a comment if you liked it.